Hi everyone, welcome back again to me, and in this video I would like to read some article again. And before I start, don't forget to like, comment, share and subscribe. The title of this article is Central Banks Will Fail to Tame Inflation Without Better Fiscal Policy, Study Says. Jackson Hole, WYO readers, central banks will fail to control inflation and could even push price growth higher unless the government starts playing their part with more prudent budget policies. According to a study presented to policymakers at the Jackson Hole Conference in the United States, governments around the world opened their coffers during the COVID-19 pandemic to prop up economies, but those efforts have helped push inflation rates to their highest levels in nearly half a century, raising the risk that rapid price growth will become intrinsic. Central banks are now raising interest rates, but the new study presented on Saturday at the Kansas City Federal Reserve Jackson Hole Economics Symposium argued that a central bank's inflation fighting reputation is not decisive in such a scenario. If the monetary tightening is not supported by the expectation of a poor appropriate fiscal adjustment, the deterioration of fiscal imbalance leads to even higher inflationary pressure, said Francisco Bianchi of Johns Hopkins University and Leonardo Melosi of the Chicago Fed. As a result, a vicious circle of rising nominal interest rates, rising inflation, economic stagnation, and increasing debt will rise. The paper argued in this pathological situation, monetary tightening would actually spur higher inflation and would spark a pernicious fiscal stagflation. On track, this fiscal year to come in it adjusts of over $1 trillion, the U.S. budget deficit is said to be far smaller than earlier projected, but at 3.9% of GDP, it remains historically high and is since declining only marginally next year. The Eurozone, which is also struggling with high inflation, is likely to follow a similar path with its deficit hitting 3.8% this year and staying elevated for years, particularly as the bloc is likely to suffer a recession starting in the fourth quarter. The study argued that around half of the recent surge in U.S. inflation was due to fiscal policy and an erosion in beliefs that the government would run prudent fiscal policies. While some central banks have been criticized for recognizing the inflation problem too late, the study argued that even earlier rate hikes would have been fatal. More hawkish Fed policy would have lowered inflation by only 1 percentage point at the cost of reducing output by around 3.4 percentage point, the author said. This is a quite large sacrifice ratio to control inflation. Fiscal policy must work in tandem with monetary policy and reserve people that instead of inflating away debt, the government will raise tax or cut expenditures. Okay, that's all from me. Don't forget to like, comment, share, and subscribe. And see you soon in the next video. Okay.